Hello everyone, welcome back into another case study. Like always, we have to understand where we're coming from. So here we have our ISA session, but we need also the context of where we are in the actual range. So if we scale up on a high time frame, we can see that we are inside this high time frame range. We have our high and our low. We have a structural break and so also our strong low that run out our liquidity. Of course, we're gonna have also Quasimodo. Remember that every time price change his direction, so let's say comes to bullish to bearish or bearish to bullish, is gonna always create a Quasimodo, right? So for example, you can see price turning bearish after being bullish. That means on the lower time frame for sure, price create a Quasimodo. Even right here, bearish to bullish, price will create a Quasimodo. It doesn't mean that you don't see this, that it doesn't exist, right? Because remember what the 3D candle formation stands for, right? So if I'm currently on the 30-minute, if I go onto the 1 minute, let's say, or whatever lower time frame, I'm gonna see with high chances a QM because that's how the market moves, right? So you can see right here the run on liquidity and breaker structure. Once you get the experience, you can just stick with the three candle formation by itself, right? Because remember, the market is fractal. So even here inside, since the market switched bearish to bullish that was before, it create a quasi-model inside. The market repeats always the same patterns all over again. Right? So we have our high, and we also have our low. Remember that it doesn't matter that this low is very bigger and this high is very tiny. The market is fractal, right? So that's our actual range. So yesterday, I do believe basically we created our inducement, the trap for today, following a T2. So maybe in the next potential day, we may get to our target. But let's see. So we created a lot of liquidity. Notice this channel liquidity called Hydra there. And also where did price came into right before Asia opened. If we scale up on the 4 hour, we don't have nothing. And on the 1 hour, we have just a wick. And that's the only key level we can take. Now, why do I have to take a key level right here if I'm expecting this high to get taken? Because it's gonna be used with high chances as an obstacle, right? Remember that key level can be a point of interest, so let's say something pro-trend, or can be also used to be an obstacle, right? It has both of the use because at the end of the day, it's just a point of interest, right? So you can either mark them up for obstacle, but what I do recommend is just to take them only if they are pro-trend, right? So price came here right before Asia opened, and we can see a nice reaction, right? This is currently very late, so we shouldn't be able to trade right here. And we can see the price also ran out liquidity right here and took out structure. Right, so now we have a new range confirmed from our low right here. Notice how obvious the QM is. To the low to the high, right? So if we know that we created this inducement, it will get taken during the day with high chances. Now, since I traded this session, I wasn't too much focused on the low of itself. Because again, I was still thinking the price will just break straight to. So having Asia close right here pretty much cleared all my bias, but I wasn't confident enough and there was no need to take out the low with a single trade. Because again, at the end of the day, you want just to grab, you want a 5, you want a 4, and basically be done for the day. If you are unsure about this range, you don't have to target it, right? You don't have to take always a decision to expect the high or the low to get taken. Because remember, we are intraday traders. So you can get a nice little in and out, and that will be basically more than enough for your whole day. Like if you don't feel confident, you can either target the internal range equity if you have a nice key level below it. Or you can just exit to your external range equity, whatever it is. Right? You're not proving no one that you're right or you're wrong. You just want to take the safest decision possible. Like if you're sure about this low being taken, just hold your trade. Trust yourself. But if you're not on the point on the moment, and sometimes it happens because remember, trading is also psychology, right? Your performance will be modified in the way that you feel, the way that your day is going, right? Because your emotion is gonna play a role. It's not gonna play a huge role, but it's gonna play a role that can be determined. So you want to make sure to don't go against yourself and just make sure to follow your rules, right? So that's basically why I didn't expect this low to hold, because to me it was already ready to go up because price already came out on a key level. And for me, what makes more sense is basically price going up. But again, you have to react. That's why it's so important to monitor price and see how it behaves. So we got Asia that closed right here. Notice also on how Asia closed. We can clearly see a strong high swept all of this liquidity, and then it took our structure. All right, so Asia closed with a strong high. That means with high chances, we're gonna be able to target the internal range liquidity. Notice this build-up of lows. I will be more confident inside my session to just exit if I want to hold a trade to this internal range liquidity, because ask yourself what's gonna happen if the market is bearish. Well, if the market is bearish, it's just gonna drop straight and even take out our low right here. But what's gonna happen if the market is bullish? Where it's gonna drop, take the internal, and go up. So in every single scenario, most of the time, you're gonna be right taking out your profit right here. Because whenever the market is bullish or bearish, and you're sure that this is your internal range liquidity of the range, you're gonna exit most of the time in profit, even if your view of the range is completely wrong. That's what I call basically a win-to-win target. Right, so we got Asia that closed a strong high, and we can anticipate at least the internal range liquidity to get taken. So what can we do basically? We can take out a short. So we're gonna break down the whole structure after Asia closed. And again, price is not gonna push straight like this. It's gonna create structure. It's gonna create a bearish market structure. So we're gonna have strong highs, strong high, and strong high. That's the bearish market structure. So again, what do we see? We see a break. We see a strong high right here, run all liquidity, BOS. That makes the high of the range. And again, why you see always a lot of trick and information, even strong highs like this inside? That's because the market is fractal. This is basically a reflection of the inside structure. If this was the, let's say, 1 hour time frame, what you're gonna expect to find inside of here? Basically ranges, bearish ranges, right? That's how the structure moves. That's how the algo prints his pattern over and over, right? So don't get confused because you see the break happening right here. So you have your high, and then just look the market on a perspective of impulse retracement. You're just gonna see price that basically just impulse straight down. And again, what is this strong high the price makes? It's basically still internal. It doesn't mean the price took out the external range liquidity like it did. It has to come up to internal very, very fast. Doesn't mean this, right? Because price is still an expansion until we take out a protected high or a protected structural point, in other words. That for us, in this case, since you're bearish, is gonna be a strong high, right? So we see price keep pushing with expansion. All of them are protected highs. We see the run on liquidity BS. That's a strong high. that should hold, and then it gets taken. So this will confirm now my range from A to B. We are still bearish because in the high time frame we are still in expansion. So we can expect a pullback that's gonna make hold this high. So potentially if you trade this range, you may find your entry to a key level. Right, so price goes up and then take out the low, making us a new strong high. Now we have a strong high right here, a strong high right here, and also all of them are strong highs. Then price takes out a strong high. This will simply confirm a high time frame range. This one in red right here. So now that we have our high time frame range, we are pretty much to the kill zone right here. So we can go to our high time frame, decide to place for trade. So what we're gonna do after we find our range? We're gonna go to the 4-hour time frame to find our high time frame key level. So we scale up, and what can we see? We have a range, that's a high, and the low is right here, as you can see. Which one is the closest point of interest? We have this unmitigated wick, right? In this case, you see it more clearly onto the 1 hour, but again, your key level may not make sense onto lower time frame. In this case, seems like a random line into the market. But again, why is it important? Because it's our high time frame point of interest, this unmitigated wick, right? So then we go down to our lower time frame, and we just want to make sure that it is untested as it is, and also has internal range equity below it. We can see this high. That's gonna be our internal range equity. We can place our trade. In this case, I place my stop loss just above to have a nice 1 of 4 out of my risk redeem. Right, so that was basically my trade. It happens perfectly on London Kilden, right here, straight to our external range equity. Now, you may feel insecure if you see all of these price action going right after your trade, because you can complain about yourself why you didn't hold the trade. But again, what are our rules? It's basically you mark up a range and you exit to your external range equity, no matter how, right? If you feel confident by holding it more, let's say to the internal range equity of the higher time frame range or to the external range equity, that would be very risky. But again, it can reward you a lot. If you want just to try as mechanical as possible, exit always to your external range equity. Because again, what will you risk if your bias is wrong? Let's say price goes down and instant reverse. Remember that price can do this. Price can do whatever he wants. So are you prepared for this? Are you mentally aware of the situation may happen? And how are you gonna feel? And how are you gonna protect your capital? Are you gonna waste a 1 of 4? Or you're just gonna take it, bank it, secure? I will personally take it. I did right here. And that's basically everything that I need. Right? Just a quick in and out during London session. Look also on how the entries should always be. Price taps your key level, instantly rejecting. Like, look at the drop that price made. If you have the right timing, you have the right key level and the right range, price will mostly give you this reaction. Now, don't freak out if you see just price sometimes reacting and play a lot inside your area. This is not a bad sign. This can happen. And there is nothing wrong with this, right? So, but most of the time, what you're gonna see is price tap your entry and instantly melting down, right? So price took our external range equity, and now this one right here is gonna be our strong high. So now let's clear up the chart a little bit. Just mark out the market structure right here. We have a break, price pulls back, break a structure. That's our strong high right in place. So we can mark this up, hit a dot, let's make this purple. And now price start his expansion. Now notice where the opposite QM forms. In this case, you can see the price took out this internal range liquidity and also gave his reaction into a high time frame key level. I already see this because it's untested Quasimodo, is untested strong low right here. But we can even mark this down with a key level. So we go to the 4-hour. In this case, that's a way too high time frame. We just see this wick. So we go to the 1-hour time frame. What can we see? A unmitigated wick just below our internal range liquidity. And that's actually how we could take out the obstacle. Again, you don't want to take the entry directly, right? You want just to wait for confirmation and potentially grab trades. Now, since I was kind of off, I didn't took out any trade right here. You could potentially look for longs. Let's see what you may get. And again, you want to see a clear, strong high being taken, right? Because let's see your weight price that comes to your area and you just take out this high. What this high was not even a valid structural point because never take out the low. It failed, right? So you may get tricked a lot by these small little details because you want just to take trades. You just rush your analysis. Take time to do your analysis. Don't rush. Price won't live, let's say, just by tapping your entry and instant reversing. If your area is very, very big, it's going to be very low probable. Like if your point of entry is very big, usually it's going to play out inside because again, we're taking a 4-hour point of interest into a 1-minute area, right? It's going to play a lot. Even if you go to the seconds, it's going to be a lot of data. So don't rush your trading just because you want the profit. Always respect your trading plan. So now you want just to make sure that you see a clear strong high being taken. So what do you see? You see a run liquidity and the BOS right here. And again, that's our simple pattern. That's all that we need. That's the high that gets run out. So now we can anticipate with high accuracy that since this strong high is being broken and we are on a high time frame point of interest, that in this case will serve as an obstacle, we're gonna get a reaction, right? We're gonna confirm a range to the low to the high with high chances. So price went up and then instantly reversed, right? In this case, if you drop to the second time frame, as we cover, every time market changed his direction, so in this case came bearish to bullish, what do we see? If we go into the seconds, we're just gonna see our simple pattern playing out. All right, you can already see this. Take out this trend information, take down this trend information, but it's not clear. If you go to the seconds, that will look very textbook, right? So market did a pullback and notice how price never took out our strong low. Every pip count into the market. This move is not, let's say, a mistake. It's not something casual. It's not something random. Always get a reason. Price went down, take out the internal range liquidity, even build up inducement, in this case, equal lows, right here, swept them out, and reverse to our target. Then what this become? This became just another strong low on the way. So it took out structure, that's a strong low, and it should hold. And you may take an entry inside this range. And again, look, around the liquidity, BOS, right here. But again, you don't want just to follow without any reason your bullish market structure, right? Because we know on a higher time frame we are bearish. And if you continue just with this order flow, you may get stepped out without even understanding why. The high time frame is king. Remember this, guy. So now that we got our break, we can just close our range right here. But again, I wouldn't be too confident to just confirm it from this little break. I will wait a major high, a major swing high to get broken, because onto this expansion, we have price made a low, a high, a low, a high, and another low, right? You can get confident by just having this high time frame point of interest in your way. But to just be more sure, I want to see this strong high being taken, that is inside this expansion, right? So after this get taken, I already know the price was already coming for something. But again, if this is gonna be your liquidity, you may not be able to even place your trade because that's gonna be very fast. Look in and out. And again, this happened during New York Hilton, right? So if this is your range that you confirm after this break by having a high time frame point of interest, what you're gonna do? You're gonna go to the 4-hour time frame and find your high time frame key level. So we go to the 4-hour, and what can we see? A wick, an unmitigated wick, and that's gonna be our key level, right? And now look how price come into. You have also liquidity just below it, and price came here exactly during the kill zone. And then look the reaction. I didn't took this trade right here. I barely missed it because I will just prefer waiting. I just had my level marked up and I just enjoy the whole reaction, right? You don't have to prove that you're always right. You don't have to prove all the information. Sometimes we are all just tired. We may just feel lost into the market, and that's normal. That you don't understand sometimes specific scenario, but after they play out, you have to take in consideration about everything that happened, because that's the only way to build guidance. So even if you feel lost right here, because maybe this POI will be the one and not just an obstacle, so it's gonna push the price all the way up to take out the high. If you're afraid to take a decision, you're not confident enough for now into the situation, don't take any decision. Just monitor price until you see something clear. Once you find your perfect scenario, just pull the trigger. You're gonna see the big reaction. But spend the time to get confidence and test out things, right? For example, right here, why did I took this trade? Because even if market was reacting from here, and let's say get our reaction to take out the high, I will still be right because market has to reach its internal liquidity and this high time frame key level. Right, so that's why I execute this trade, because on every single scenario I could imagine, I will basically win. Like the only scenario I will get stepped out is for any reason price will just went up right here. So that's basically the trade that we could catch today. You can even stack inside of here and even inside of here, but that will be something lower time frame, and I will personally avoid if I have just to look to high probable setup. But again, they're not low probable for the range itself, because again, a range works simply because it's a range, right? It has all the counts that we need for the market. It has liquidity, inducement, etc. It has a lot of things going, so it's not something just a work of time. But again, most of your trade, they're gonna happen during Hilton. And look all the reaction they made. They're not gonna happen all the days, all the time, right? But they happen very, very a lot, to be honest, right? So that's why I mostly trade during only this time. But again, we went over all of them that basically are off our trading and they work basically perfectly. We have liquidity, key level, right? That's always how the strategy is and it should be, right? So that's all for this case study. See you into the next one.